Hi, John McElroy here, talking all things automotive. Are you thinking of buying an EV? If so, you better be aware of what it's going to take to qualify for a tax deduction, because everything just changed with the so-called Inflation Reduction Act. And that's true whether you want a new electric car, a used one, or a commercial truck or bus. Let me warn you, this is going to be confusing. Also, I'm not going to get into every single little detail because we'd be here all day. The House of Representatives devoted 60 pages of rules and regulations on EVs, and then the Senate added another 40 pages of changes. But let's get to the highlights that I think are going to impact most of us. First off, the new regs get rid of that rule that capped EV incentives to the first 200,000 BEVs and PHEVs that a car company sold. As you know, Tesla, General Motors, and Toyota already hit that cap. But now they can sell as many BEVs as they want and get the $7,500 tax credit as long as their EVs and their batteries and their customers qualify. So here's what it takes to qualify, and let's start with you. If you are buying a new EV, you can get the tax incentive as long as you don't make over $300,000 a year. That's if you're filing a joint return. If you're filing as the head of a household, you qualify as long as you don't make over $225,000 a year. And for everyone else, you qualify as long as you don't make over $150,000. It's different if you're buying a used EV. You can qualify for a $4,000 tax deduction as long as you don't make over $150,000 if you're filing a joint return, or if you don't make over $112,500 if you're the head of a household, and everyone else qualifies as long as they don't make over $75,000 a year. The House version of the bill was actually quite a bit more generous for people buying a new EV, but the Senate cut that back because it didn't want to be handing out taxpayer money to high-income people. Now, here's what kind of EVs qualify. First off, they have to be assembled in North America, the US, Mexico, or Canada. If the EV of your dreams is not made in either of those three countries, no subsidy for you. And then there's a price cap. Electric passenger cars qualify as long as they don't cost more than $55,000. Electric pickups and SUVs and vans qualify as long as they don't cost over $80,000, and as long as they have a gross vehicle weight under 14,000 pounds. Congress put on these price and income caps because it didn't want to be subsidizing rich people buying luxury vehicles. Though in my book, $80,000 is quite a generous cutoff point. Actually, there's one tax credit for the EV and a different tax credit for the battery. As long as an EV qualifies in terms of MSRP and country of origin, it qualifies for a $4,000 credit. And then, if it has the right kind of battery, there's another $3,750 credit. And there's a lot more rules and regulations that determine what's the right kind of battery. Up until December 31st, 2026, EVs have to have a battery pack that's at least 40 kilowatt hours to qualify. And if they have a range extender, the gas tank cannot be bigger than 2.5 gallons. Then, on January 1st, 2027, EVs have to have a battery pack that's at least 50 kilowatt hours. But then there's even more restrictions on those batteries. Starting in 2024, at least 50% of the value of the components that go into the battery have to be made in the USA. In 2025, that goes to 60%. In 2026, it goes to 70%. In 27, it goes to 80%. In 28, 90%. And by 2029, 100% of the battery has to be made in the US. So it looks like for now, just about any EV made in North America that comes in under the price threshold qualifies for that credit until 2024. After that, the domestic content rules for batteries kicks in. Okay, that's what it takes to qualify for new EVs. Let's look at what it takes if you want to buy a used one. First, the EV has to be at least 2 years old and does not cost over $25,000. And it has to be assembled in North America with an American-made battery. If it meets those requirements, you get a $2,000 credit for the car and another $2,000 for the battery as long as the battery is equal to or bigger than 40 kilowatt hours. After December 31st, 2026, the battery has to be at least 50 kilowatt hours or bigger. And if the used EV has a range extender, the gas tank has to be less than 2.5 gallons. For commercial vehicles, the rules are a lot easier and a lot more generous. They have to meet the same domestic content rules, and then the government allows fleet owners to deduct the incremental cost of an EV over its diesel equivalent, or it can write off 30% of the MSRP, whichever is lower. So how does the government define a diesel equivalent? That means an electric truck or van has to be of a comparable size to its diesel counterpart and have a comparable use. If it does, fleet owners can qualify for up to a $40,000 tax deduction. This actually favors smaller vans and trucks, since buses and big rigs cost so much more. But if you remember the Infrastructure Investment and Jobs Act that was signed by President Biden last November, it gives very generous incentives for electric school buses. One more thing. Commercial fleets can also write off $100,000 for every electric charger that they install at their facilities. So, I hope you got all that. Those are a lot of numbers and dates to try and keep track of. But here's the bottom line. You can get a tax credit to buy an EV as long as you don't make too much money, as long as the EV doesn't cost too much, as long as it's assembled in North America, and as long as the battery is made in the USA. Some of this might change. The European Union, Japan, and South Korea are protesting that this is a blatantly protectionist approach to subsidizing EVs, which it is. They're threatening to sue via the World Trade Organization, and they could win, but that's going to take years to wend its way through the legal process. So if you want to get an EV anytime soon and really want that tax deduction, now you know what to do. And I hope this video helps you figure out what to put on your shopping list.